A credit card can advertise rewards, convenience, and a low introductory rate while still costing more than expected. The real price is not found in one number. It is the combination of interest, annual fees, transaction fees, penalties, and the way you use the account. The first fee to understand is the annual fee. This is a charge for keeping the card open, often billed once per year. Some cards have no annual fee. Others charge one because they offer travel credits, airport lounge access, higher reward rates, or benefits that cost the issuer money. An annual fee is not automatically bad, but the benefits must be worth more to you than the fee. The second is the late fee. A payment can be considered late when the issuer does not receive at least the minimum by the deadline and applicable cutoff time. The amount and legality of a late fee depend on current regulations, the issuer, and the account terms. Rather than memorizing one national dollar figure, review the pricing table on your own card and pay early enough to account for processing. The third is the balance transfer fee. A balance transfer moves debt from one credit card to another. The new card may offer a 0% or low introductory APR, but the issuer can still charge a transfer fee. For example, a 3% fee on a $5,000 transfer equals $150. That cost is usually added to the new balance, so the transfer is not truly free. The fourth is the cash advance fee. A cash advance may occur when you withdraw cash from an ATM, use a convenience check, or complete another transaction the issuer classifies as cash-like. The card may charge a flat amount or a percentage of the transaction, often whichever is greater. Cash advances can also carry a separate APR and usually begin accruing interest immediately. The fifth is the foreign transaction fee. Some issuers charge this fee when a transaction is processed outside the United States or in a foreign currency. The exact trigger depends on the card agreement. A purchase made online from a foreign merchant can sometimes qualify even when you are physically in the United States. Travelers should check whether the card charges this fee before leaving. The sixth is a returned payment fee. This can occur when a scheduled payment is rejected, perhaps because the linked bank account lacks sufficient funds, is closed, or has incorrect information. The credit card account may still be treated as unpaid, and the bank account could impose a separate overdraft or insufficient funds charge. Always confirm that automatic payments actually cleared. The seventh category includes fees connected to optional or unusual services. An issuer may charge for expedited delivery, certain paper statement requests, replacement cards under specific circumstances, or other services allowed by the agreement. Some products also include fees for adding employee cards, exceeding a benefit limit, or using a particular payment channel. These are not universal, so the disclosures matter. Interest is not technically always described as a fee, but consumers should treat it as part of the total cost. A no annual fee card can still be expensive when a balance is carried at a high APR. Conversely, a card with a reasonable annual fee may be cost-effective for someone who uses the benefits and pays in full. A simple break-even calculation can prevent bad decisions. Suppose card A has no annual fee and earns 2% cashback. Card B charges $95 per year and earns 3% on the same purchases. The extra reward is 1 percentage point. You would need $9,500 of eligible spending just to earn an additional $95 and offset the fee before considering other benefits, caps, exclusions, or interest. Promotional wording requires extra care. 0% APR does not mean zero cost if a transfer fee applies. No foreign transaction fee does not guarantee a favorable exchange rate if you accept dynamic currency conversion from a merchant. No annual fee does not mean the card lacks late, cash advance, or return payment fees. The best way to evaluate a card is to read the standardized pricing table before applying. Look for the purchase APR, balance transfer APR, cash advance APR, annual fee, transaction fees, penalty terms, grace period information, and promotional expiration date. After opening the card, review notices because terms can change, subject to legal requirements. Avoiding most fees is possible. Pay on time, avoid cash advances, decline unnecessary services, use a no foreign transaction fee card when traveling, and complete a break-even analysis before paying an annual fee. If you use a promotional offer, calculate the required monthly payment and the transfer fee before accepting it. The main takeaway is that a card's advertised reward rate is only one side of the equation. The best card is not the one with the largest headline benefit. It is the one whose total cost and rules fit the way you actually spend and repay. This video is for informational and educational purposes only and is not financial, legal, or investment advice. Review the card's pricing disclosures and your individual circumstances before applying for or using an account.